Hi, everybody. Today we're here at Kiss My Assets podcast with Jamison, our CEO.
That's my nickname. You're giving it away.
I've earned it. And me, an investing novice, someone who is anxious for information. And also I work in investor relations. I'm Heather.
Yes, and you're definitely not a novice, but just a little bit of a background. I grew up as Jamie. So anyone who knows me before ninth grade called me Jamie. So now that I have family members that work here, now they call me Jamie. So it's kind of penetrating throughout the rest of the office.
And it's a trustworthy name. I feel good about it.
Okay, good.
So we are here because I have questions. Our investors have questions about how to invest and what to do with their money. And what do you do when it seems like just a little bit of money. I don't have a ton of money to do a lot with. How do I plan for a future?
Yeah, and I think one of the big things that's on a lot of investors' minds is all the news around inflation. And now with the Fed raising rates to fight inflation, there is a lot of angst in the stock market. So this week, the stock market's been down. It was down last week. We're down 15 to 20%, depending on the index so far this year. That was after 3 years of really strong growth. So we got to put that into context. But there's a lot of angst.
It's taking a rest.
Yeah, and that's actually very, very true. There's a little bit of a correction going on, and that's what's on a lot of investors' minds right now is what's going to happen with the stock market. We're real estate folks, and so we published a little infographic on our social media. You can see it on our Instagram, Neighborhood Ventures Instagram, that shows the performance of those major indexes so far year to date versus our 12%, which is what we're still paying out to investors.
Yes.
And that,
happily.
Something I'd like to talk a little bit about today because real estate continues to do well, and it typically does better and has different performance than the market. It's what we call uncorrelated. So like some things go up with the market, some things go down with the market, and they follow the same pattern as the market, the broader market. Real estate is not necessarily correlated where if the market goes up, real estate goes up. If it goes down, real estate goes down.
It's its own man. It's an individual.
Yeah.
Yes.
And that's actually what you want.
Yes.
As an investor, you want to have a diversified portfolio of uncorrelated assets so that if one doesn't do well,
something else to take the slack, right?
Exactly.
Yes.
And so that's a big theme we're seeing right now.
All I know is when I saw the graphic is things were below and one thing was up. And I just know, I don't want to know too much. I don't like a lot of information. I just know I want the thing that's going up.
Yes.
And that's how I make my decision.
Yes. And most people have assets in the areas that have gone down this year. But it's also good to offset that with what's going up. You're looking at it in exactly the right way. Having some that are going up when others are going down is better than all going down at the same time.
Yes. And then that keeps me even.
Yes.
I get to stay calm and I don't have to go up or down.
Yeah. So you were talking about one of the investors, one of the questions we're getting a lot from investors about who are starting to invest.
Especially our brand new investors that call us and they say, okay, I see $1,000 is your minimum investment. And you're talking about passive income. How does that make sense? How am I getting rich off $1,000? And it's a nice way to lead into a conversation. We can talk about, well, what are your goals? Are you focused on income or growth long term? And we can have that conversation of how you build, how that $1,000 will build into something wonderful.
Yeah.
Yeah.
Yeah. And I think that's kind of a misconception out there with some of the younger folks that I know coming out of college is they can start using a few $1,000s to day trade or do other things, and they're going to all of a sudden make thousands on their few thousand.
Yeah.
And it's not the way that it works.
No, that's for Vegas.
Yeah. That's a whole different thing, and you're more likely to not do well in that scenario. So it's great that people start out with a few $1,000s. The idea is that you want to start putting as much away as you can as your income goes up. And I think what a lot of is really happening when you're in college, when you're in your early years, it's getting those habits of saying, okay, I have X coming into my account every month from income.
Yep.
I'm going to start putting away part of that income into savings. I'm going to put some away into investing. And initially, the savings amount should go into your emergency fund.
Yes.
An emergency fund is like 6 months of your expenses.
I love an emergency fund.
Yes. You need an emergency fund.
I do. I feel I'm a nicer person.
Yes.
The things in the news are less scary when I know I have an emergency fund.
Because if anything happens, you at least have 6 months where your bills are going to be paid. And typically the economy, if you have a little bit of a buffer, will figure itself out in 6 months.
Yeah, it gives you time to plan.
Yeah.
Not panic.
That's exactly right. We saw that with COVID. So, the economy got shut down totally for like 3 months.
Yeah.
But then it opened back up and things were happening.
Yeah.
So if you have that 6 months, that's that security blanket. Then after you have 6 months, you should start looking at investing the other 10%. And that's where you should start. So let's just say you're starting out, put away 20%, 10% into savings, 10% into investing. Once your emergency fund is full, then I think you move everything to investing, all 20%. Yep. And it's really about building out those habits.
And the bigger that number gets, the more exciting it is. That's what I found with myself. Like the more I see go into the count, like all of a sudden I want to put more money. This is great. Look how wonderful I am. And I will tell everyone about it.
Yes.
I found that $1,000 is precious to me. That's a big deal in my life. There's a lot of things I can do with $1,000. There's a lot of things I can do with that money right now. But I have to really envision like future me and what the life I want that to look like. And I have to do things to like trick myself into like, when I was saving for a house, I made myself a Pinterest board of what the house would look like and how I would decorate and all these things. And then it was so much easier to put that money away every month because I had a clear picture of where this was going. And it's the same with, I think, with investments, is I am picturing myself at like 70 years old in my fabulous like house with in my muumuu, like that. And so that's easier to put that money away or to invest it.
Yeah. And I think a key point that you hit on is that it actually starts becoming way more fun to invest and to see your money grow than even spending your money.
Yeah.
Because spending money is fun. There's no denying that.
I'm very good at it.
Most people are.
Very good.
It's easy to enjoy spending money, and there's nothing wrong with spending money if you have it to spend. But what's interesting is and I've seen this in my own life, as I've started to invest more, I get more satisfaction out of delaying my own gratification.
Yes.
Not buying, a new set of sneakers all the time, and seeing more money go into my investment account and seeing that grow. Ultimately, as your investment account grows, then you can begin to get passive income.
Yep.
And with us, we pay about half of our returns come every month in passive income, 6% of the 12%. And then the other 6 comes when we sell the building. And with the passive income, that can offset your living expenses, so you actually get money coming in.
And that's like Christmas morning to our investors. That's the best day when we get to call people and say it's sold and here's your all of that. Those are fun phone calls.
Yeah. And we have a lot of investors who get their distribution on the 10th of every month, and that's how they pay their bills.
Yep.
And that's a really great place to be because you're not working for that money. That money's working for you.
Yes.
And so you talked about the 2 different broad investment strategies. You have growth investing.
Yep.
And then you have income investing or investing for income. And we already talked about passive income. That is an income-based investor. So that's someone who is wanting to invest dollars today to get income every month to live on.
Yep.
And that tends to be someone who is either retired or nearing retirement. The $1,000 person who we're talking about, who's starting out, maybe they're early in their career, they're a student, to start building those habits, it's really about starting to put money away for future growth. And what we're seeing right now with the stock market really impacts people who are nearing retirement more because they have less time to make up for whatever losses they've seen in their portfolio now. If you're a young person, you don't need to get caught up in that. You just need to build those habits, put money away. I like real estate more than the stock market. You probably want a little bit of a blended portfolio. I put all my capital in real estate because I like it a lot more. But over time, they're going to make that up because they still have, decades worth of earnings.
It's
coming.
slow and steady, which I think is great. And the time passes no matter what. And that's what I found, because I woke up one day and I was old, and that time passed somehow.
Yeah.
And I look back and I thought, oh, there's all these things that I could have been doing to prepare to get to this point that I just thought, oh, that'll never come. That day's never going to come. And there it is. And it would have been nice to have started early on. Like, we have some investors, young investors, that I'm so proud of. That started small while they were in college, and they're now graduated and grown up jobs, and they are putting money into every project, and that amount's increasing. They've really built up a good return that they're getting, every month, that I just think this is admirable. And I wish all young people could watch that time's going to pass no matter what.
That's
you
right.
might as well have more money at the end of it.
Yeah. And it just begins with those habits.
Yep.
Just making those commitments, and you can decide, I'm going to put $100 away from every paycheck. Whatever little game you need to do. The Pinterest idea was great with the Pinterest board for your goal, but start building those habits, because we also have investors at the other end of that who, have quite a bit of capital. They've been doing that for years.
Yep.
It didn't just happen overnight.
No. And it takes some discipline.
Yes, and that's how they got there. And one other thing that I think can help is having a goal this year, if you are starting to invest, is to fully fund your IRA.
Yep.
And that is $6,000 a year. So in 2022, put $6,000 into your IRA. Once 2022 is over, you can never put more money into that IRA.
Yep.
The government only gives you that amount every year, annually. Put it in. It forces you to put the money away, and then you can invest with that IRA in the stock market. You can invest in mutual funds. You can invest in cryptocurrencies. You can, if it's with self-directed IRA, which is what most of our clients use, you can invest in our projects.
Yep. And they're wonderful to work with. They make it very easy.
Make it very easy. And the biggest thing is, if you put that money away and let it work for you, you don't pay taxes when you pull it out.
Which that I love.
Yes.
Yes.
So you can put in a couple $100,000 through your lifetime. It will grow to, over $1 million if you start young. And when you start pulling out that $1 million, you won't pay taxes on it. Remember, taxes are our biggest expense in life.
They really are.
For most people, it's 20 to 40% of your income is taxes. So that's a lot of your income. If you can have, $1 million when you retire in an IRA, tax-free, that's a really big deal.
I could do some really fun things with that.
And it's also a great way to just start the process, start putting that money away now.
Which means right after this, I am going to go put more money in the IRA. Check, and my dad will be proud.